Okay, this is Chapter 2, Money Management Skills. We're going to talk about wise money management, balance sheets and cash flow statements, developing a personal budget, and then connecting money management activities with savings for financial goals. So another word for money management is really a budget. Do you have a budget? Have you used a budget? We're going to talk about how budgets can help you in a lot of your personal financial goals. So these are the parts of money management. First, there's record keeping, and then analyzing the situation, and then last, creating a budget. And we'll talk about each of these things in the following slides. So first you want to gather all of your personal financial records and documents. So you want to develop some kind of filing system. Then you want to look at those documents and create figure out how those documents can work together for your budget. And then, of course, creating a budget. So here is a list of filing system objectives. You would use your filing to handle daily business affairs, such as bill paying, planning and measuring financial progress, completing required tax reports, making effective investment decisions, and then determining available resources for current and future buying. You should really have all of the following records in your home. And this is exactly how long that these records should be kept. And does anyone here have a safe deposit box? A safe deposit box can be located at a bank or a credit union. For a small fee, it's usually like $50 or $75 a year, you can have a safe deposit box. And here are the records that you should be keeping in that safe deposit box. And then here is a visual that shows you what items should be kept in a safe deposit box or a fireproof home safe. So you may also store your documents online using the following precautions in the cloud. Or you can store your documents on your personal computer. You must remember always to back up your files because if you start scanning all of your records to keep them on the computer and you're not continually backing up your files, you can lose some of that valuable information. So here is a visual detailing how this might look for you. You could, on your personal computer, you could create a different file for each of these types of records. And then here is a visual identifying what you should be getting rid of and how you should get rid of those things. Should you throw them in the wastebasket, use a shredder, or a computer recycle bin? So here we list the purposes for creating your own personal financial statements. So a balance sheet shows you what you own and owe. And here are the 3 main steps to creating a personal balance sheet. You need to list items of value, determine amounts owed, and then compute your net worth. And here is what your balance sheet should look like. Your net worth equals what you own minus what you owe. Ideally, you want to own more than what you owe, and that creates a positive net worth. However, if you owe more than you own, that would create a negative net worth. There are 4 ways to increase your net worth. You can increase your savings, reduce spending, increase the value of investments and other possessions, or reduce amounts owed. Next, we'll talk about a cash flow statement. So a cash flow statement shows cash coming in and cash going out. So the cash coming in would be your income. So all of your income would be included as cash inflows. Cash outflows would include all the money coming out of your account. So that would be all your spending, all of your saving, and your donating. So there's 3 steps to creating your own cash flow statement. First, you want to record your income, then record cash outflows, and then determine net cash flow. And this is a sample of what a cash flow statement should look like. So a budget is necessary for successful financial planning. Budgeting is the most effective way to reach your financial goals. And here are the 7 steps to developing a monthly budget. So first, you set financial goals, estimate income, budget an emergency fund and savings, budget fixed expenses, budget variable expenses, record spending amounts, and then review spending and savings patterns. And this table explains 5 ratios used to evaluate financial progress. And then here are some common examples of financial goals for different personal situations. And this is what your budget should look like. And here is an example of percentages of spending in different areas of your budget. You could also develop a money management SWOT analysis. Some of you may remember what a SWOT analysis is from other business courses, but really it details strengths and weaknesses, opportunities and threats. This helps identify the objectives. And then here is the criteria of a successful money management plan. It needs to be well planned, realistic, flexible, and clearly communicated. There are many budgeting systems to choose from. There's a mental budget, there's a physical budget, a written budget, or a computerized budget. And here's an overview of 3 components of your money management plan: your balance sheet, your cash flow statement, and your budget. Changes in net worth result from cash inflows and outflows. And here are some ways to change your net worth. Savings should start now. Here are some techniques to begin your savings. And savings can increase your net worth. And this visual shows how to use savings to achieve financial goals.